Tata Consultancy Services is set to kickstart the IT sector earnings season for the second quarter of the financial year 2024 on Wednesday. It is expected to be a crucial quarter for the IT services bellwether given the internal restructuring of its vertical and the new vertical head appointment. That's the first major leadership rejig under new CEO Kirthivasan. According to most of the analyst community, Q2 is likely to be a muted quarter. Continuation of the softness seen in the previous two quarters only expected to accentuate in this quarter. What we expect typically from TCS in terms of dollar revenue term is a uptick to an extent of 0.75% at a number of around $7,280 million in this quarter. In terms of the revenue growth, constant currency basis, we are expecting a 0.8% uptick as per the CNBC TV18 poll. Margins are only expected to be around 23.6% as compared to 23.16%. So flattish margin growth. PAT is expected to be somewhat flat, but what lies ahead? What are the key monitorables that we like to watch out for? Let's actually get in the conversation going with regards to the changes, the structuring, deal wins with the Bangana Ghosh, who tracks this sector pretty closely, and specifically TCS and the expectations that are building in from this one. Afternoon there. I'm going to start off by asking you your assessment with what are you expecting with regards to the entire read-through for the IT sector. The first 6 months have been rather rewarding for the IT sector in terms of the stock returns. Q2 is expected to be a traditionally strong quarter. Do you think the numbers will reflect that optimism?
Well, I think firstly, Nikki, thanks for having me on the show.
Pleasure.
But I think the numbers are going to be, it will quite depend on how the commentary on discretionary spending comes up. And last 2 quarters has been pretty slow in terms of understanding how the deal closure timelines would work out for the IT companies, given the macroeconomic challenges that's ongoing. And that's the similar trend we are seeing across mid-tier IT companies as well. So, yeah, I believe that's going to be more or less what we are going to see. Analysts are expecting another subdued quarter similar to what went on in the last 2 quarters. And all eyes will be on understanding whether the worst is behind for the sector.
That's precisely what I wanted to understand, both in terms of if you could give a bifurcation between the mid-cap and the large cap, what sort of expectations are we working with? Do you think mid-cap would this quarter could be yet another quarter of outperformance for the mid-cap IT companies?
More than outperformance, going by what the analyst and the street is expecting, there are a lot of uncertainties, especially if you want to look at it from more of an EBIT margin or operating margin perspective. Some of the top mid-tier IT companies like LTI, Mindtree, Persistent, as well as Happiest Minds are going to see their wage cycle kick in this quarter. So that might have some impact on the overall on the margin front for these companies. But in general, the trends and the concerns remain the same across these companies as well. Discretionary spending is low.
We're talking about that, Debangana.
There are concerns around how clients are thinking over tech spending.
Okay.
Sorry?
Okay, so I was just talking about, we're going to be getting back to the discretionary part in just a bit. But before that, if you could, first read through of Accenture is already reported in their numbers, right? So what are the earnings and the read through and the implication that it might have on the IT sector essentially?
So the CEO has given like a clear indication that discretionary spending is yet to see a revival and might not happen in the near term at least. Accenture's performance too was more of a mixed bag in terms of earning numbers, as well as the guidance seemed to be pretty subdued for the next year.
Okay, essentially what's your expectation from TCS? Of course, we're going to be chatting about the 3 key monitorables according to you. What's your expectation and the 3 key monitorables, if you can put that in perspective for us?
Sure. Firstly, to begin with, in the case of TCS, TCS would have probably outperformed in not just in Q2, but overall in 2023 in terms of the mega deal wins that the company has seen, especially in the United Kingdom region. Uh, Mostly these are like $700 million plus deals, multi-year deals. There have been several deal renewals as well for TCS so far in 2023. While these deals have closed in, one of the biggest one again is the BSNL deal that TCS got from the government. It's a $1.9 billion deal. Uh, in terms of how these deals would convert into profit and revenue, that might take some time. So although there are strong deal wins in the pipeline, that might not immediately convert into revenue and profits to show in the numbers. That might be still a couple of quarters away. But yeah, the deal wins are strong. So the concern right now is to understand whether this pipeline will continue in the upcoming quarters. The second key aspect I would say is, like you mentioned, that there has been an internal restructuring since the new CEO K. Krithivasan took over in the last quarter. So the verticals have been, so they have gone for a vertical wise structure. There has been new vertical heads appointed, especially for the BFSI segment, which accounts for nearly 40% of TCS's revenue overall, and which was previously headed by K. Krithivasan entirely. That segment has been split into two. There are two heads now and has been split geographically. TCS has also started a dedicated AI unit, and because generative AI is being seen as the next key deal winner, or rather an element which is pretty much necessary in winning the deals for the IT sector companies as well. So those are a couple of monitorables that I think TCS will be looking forward to.
Okay, so the first thing that you mentioned in terms of monitorable was apparently the restructuring. The second one that you mentioned was the deal wins, and the third aspect that you mentioned was?
Oh, yeah, of course, the hiring trends. So TCS is going slow in terms of adding new employees as well. So that's sort of, we can say, is an impact of the demand scenario. It's a reflection of how the demand is shaping up. And also looks like TCS is now more focused on improving the utilization rate as well. So yeah, hiring is going to be slightly slower in FY23. All right. And not just TCS, for most of the IT companies, in fact, this year.
Point well taken. Also, let's talk about discretionary spending, perhaps a bit of worry for the entire IT sector, which is yet to see any kind of revival. Would you be tracking any commentary around that?
I think that's what the major commentary and the expectations are going to be overall about. I mean, TCS, for example, did this entire restructuring. How is it going to convert into deals? How are the client conversations shaping up right now? Are the clients now opening up in terms of, allocating tech budgets well? Then there were concerns around their budgetary pressures. There is inflation going on. There are new wars coming up from a macroeconomic perspective. The guidance and the management commentary on the North America market too would be important. North America being a key market for TCS, and it has been slightly slower than the company expected for the last couple of quarters.
All right. In that case, the last question that I have for you, Debangana, is actually second last. Let's talk about buyback size. Yeah. You think something, most of the analyst community, let's just say JP Morgan, India Infoline, or Morgan Stanley, they've pegged a range to an extent of 18 to 22,500 odd. You think the buyback size, the price will have a bearing? How does that affect? How can one read into it? And do you expect any other IT companies also to come up with which are eligible to announce a buyback within this quarter?
Well, if I had to focus only on TCS, this is something actually I think a lot of the investors will be looking forward to. This is going to be TCS's fifth buyback since 2017. So this is kind of an indication that the company management is sort of confident about the company's business maybe in the upcoming quarters. So going by historically how it has panned out, TCS has been given a buyback at a premium of around 10 to 18%. In the previous quarters, the range in terms of how much has been bought back was around 16,000 crores or so. So yeah, pretty much let's see how the analyst estimates pan out to that extent.
All right. Also, I think most of the analyst community are also, let's not just say analyst community, most of us are also talking about the work from office scenario. What
Yes.
are your expectations? Because the CEO has been talking about it enough and more. What do you pick up?
So that is actually an interesting and unexpected turn coming from TCS, because the former CEO Rajesh Gopinathan had come up with this vision of 25 by 25. I think he announced that sometime in 2020, which meant that by 2025, TCS was expecting only 25% of the workforce will be in offices at any given point of time globally. And will be working for only 25% of the time, and something on those lines. So now, given the new change, suddenly TCS has recently, I think last month, this came up that TCS had mandated certain teams within the organization to work from office 5 days a week. Earlier, it was 3 days a week. So that has sort of made certain employees quite angry. Now, whether this is a signal that work from home era is over for most of the IT companies, that we are yet to see, but most likely I think 3 days a week has been mandated by most of the IT companies right now. But how this will pan out, how TCS is planning out on the whole return to office scenario, and also whether the 25 by 25 vision still stands, will be something we'll be looking forward to.
I think, Debangana, you shouldn't be as unhappy, because the work from home still continues, at least for some
Yes.
employees for us. So I don't think there's a reason for you to complain out there. But thank you so much for taking out the time and having this interaction with us.
Sure. Thanks so much for having me.
All right. Well, IT major likely is expected to post in single-digit revenue profit growth. The stock isn't going anywhere right now. It's pretty much trading flat. But with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below, and follow us on the link at the bottom of your screen. For rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.